This is where we were interrupted yesterday by the bell. We had done the trial balance, we had done the adjustments, and we'd brought everything over in our little car by adding people or kicking people out of our car. And we were working on, no, we weren't. We were in the middle of that, weren't we? Okay. Did we do accumulated depreciation? We must have. So accounts payable, I jump in my credit car, smooth sailing over to the adjusted trial balance. Some of you are getting smart. I look at Jenna and she's got a piece of white paper to help her. That's a lot better. Unearned service revenue, why do we see a little hiccup there? With something with the credit, why are we debiting that? It starts with L, liability, and we're reducing unearned into earned. So that's why we see a credit card hit that debit, and we of course subtract. You won't see a change in owner's capital or drawing because they're not impacted by adjusting entries. Take note of their debit and credits though. Service revenue, we will see a change there because when we turn unearned into earned, $6,300 credit, we get in that car, we hit a credit, so we're going to add it. Which means when we reduce that liability, we actually got to claim that as earned income. So that's why it's a plus. The expenses, you'll see changes. I see we've got a debit card, we get to another debit, so that would be a plus. Miscellaneous expense, that's smooth sailing. That completes the top section. Now we've got the little section that exists just because of adjustments that we did. So they probably will be zeros starting out. So an expense with another debit is a plus. So is depreciation expense. 0 plus 250 is 250. Salaries and wages payable, that liability 0 plus another credit is 700. Now I'm going really fast. I get that. It's just kind of the formality of getting it in. You just have to look. This is a star. This is a normal balance. Adjusted trial balance is a normal balance. And as you cruise along, you look at what column it's in. And so like here, in this case, it's a debit. We cruise to a credit. That's got to be a minus. It's opposite of the normal balance. We would pause and do our totals again. So 24,450. I think this next part's pretty easy. It's just if you can move numbers, it becomes pretty easy. I think let's mark stuff up out here on the left. Cash through drawing. Cash through drawing is balance sheet. Revenue and expenses are income statement. So it becomes a matter of just putting them in the right spots over here. So I'd like you to do that much, and then we'll talk about the bottom. So on the top part, we're transferring all of this to balance sheet, and you don't need the income statement columns. This little bottom chunk, a revenue and 2 expenses, that's going to get dumped into income statement, and you don't need the balance sheet columns there. Again, this is looking like an art project, like crazy. We do have that little bottom section, which we'll tackle that here in a minute. As we get into this little bottom section, you got to be careful because some of them, like I see an expense, so that's income statement. I see another expense, that's income statement, but I see payable, that's balance sheet. So you got to make sure to put them in the correct spots. So you've done this already. You can just write in the totals. You don't have to sit and add them yourselves. You can just write them in based off the answer key. But the big thing that you'll see is the debits do not equal the credits. And that's the fundamental accounting premise that basically all of it's built on. Your debits need to equal your credits. And if you recall in your notes, I gave you kind of a cheat sheet on if this is the case, we've got to get them to equal, and it becomes either net income or net loss. It's really easy to tell right now if it's a net income or loss when you look at the totals. Obviously, 6640 is greater than 4100. Well, 6640 is revenue. So our revenue is greater than our expenses, hence the word net income. Do you have net income down there? Fabulous. I need just a minute because I think I have a bigger version of this somewhere in my notebook. Yes. Are those our numbers? Yes. This is an exact duplicate of the income summary. 6640 is larger than our expenses. So we'd bring that total down and we'd use the little box to fill in the difference, which is the net income. Miraculously, when you add the net income to the expenses, it equals the same thing as revenue. So when we do our closing entries in a minute, we're going to see that same thing happen. That is a mimic of what's going on down there at the end of your worksheet. So if all of a sudden we have this, and I guess I don't know where my highlighter went. We have this debit. On the other side, our debits don't equal our credits. If we've got a debit, we need a credit somewhere, and then that miraculously gets our balance sheet to equal out as well. The reason being is that net income actually gets added to capital, which has a credit balance, and bam, there's accounting at its finest. If this has been confusing to you, just this weekend rewatch the video just to see where the numbers come from. One thing I've kind of shortened here, and I've not really talked about it at all, the need for single and double ruling. So like single, double ruling, single, double ruling, single ruling, single ruling, double ruling. A little bit messy there, I'm sorry about that. Overall, is there a question that I can answer about worksheets? On the test, it won't be as many accounts. And if I recall, you have all of this on the test. So the answer key wants us to journalize the adjusting entries. So can you find this page in your workbooks? We're doing problem 4.1a. And so if you find that in your workbook, if you guys get a page number, let the group know. I think so. 173. It'd be problem 4.1. Yeah, 174. No, that's not it. Yeah. Yeah, perfect. 175. They want us to journalize the adjusting and the closing entries. Okay. I'm not going to have you journalize adjusting entries on the test. Okay. Where did I get these? These came from the worksheet. We're not going to do them. Like, you can see, like, this one's A, this one's B, this one's C, this one's D. We're not gonna do those. It's just a formality. You could pull them. We're skipping that part. Okay. You can X that out. On the B set, you'd X it out, and on the C set, you'd X it out. We are, however, going to do the closing entries. Do you think you can do the closing entries without the little T accounts? Should we try? Let's try. It sounds fun. There are 4 closing entries, and I think maybe what we should do is write them. Do you have little dates? Are they predated? Perfect. So out here on the left column, let's write the 4. I think it says closing entries on yours, doesn't it? Okay. Why do we close accounts? Or what does it mean to close out an account? It means to, it starts with a Z, zero it out, okay, to get it ready for the next fiscal year. Are we just getting rid of the accounts? No, we're kind of shuffling them all into the owner's capital accounts, okay? It basically is the owner taking his or her share of net income and the owner taking a hit for drawings. There's 4 to do, and let's label them. The first one, we close revenue into income summary. The second one, we close all expenses into income summary. The third one, we close or zero out income summary into capital. And that becomes their share of either the net income or net loss. And then the last one, we close or zero out drawing into capital. We're going to try this without my little form just to see how you do. So if we're going to close out revenue, where are we going to find the number for that? The balance of revenue was on the income statement on the worksheet. The number is 6640. The reason it's not what started way over on the left on the trial balance is because we had some adjustments pertaining to this one. Think about service revenue a minute. If I draw a little T, you might not have room because I erased, but if service revenue is sitting there with a debit balance of a credit balance of 6640, the reason we need to debit that amount is so that we can get it to equal 0. Because that's what closing out means. It means getting a 0 balance so we can start our next fiscal period. Someone tell me, and I feel like I'm on repeat here, but someone tell me the problem if we would credit it by 6640. You'd be doubling it. So to force the 0, we actually need to debit it. If we have a debit somewhere in accounting, we need to have what with it? Credit, and what you wrote in your little side margin, we close it into the income summary. It's that little holding tank as we get through all of our our closing entries. So it looks exactly like the bottom of your worksheet. what we just did is we credited the income summary to close our revenue. Next one. What do we have to close in our next entry? What do you write in your side margins? All the expenses. So they are rocking debit balances. So to close them, we need to credit them, because if we debit them, we double them, and that's not what we're going to do. So what will our debit be? If we're crediting all of the expenses, what's our debit going to be? Income summary for the total of the 4 expenses added up. I guess I am kind of a T account girl through and through. I'll show you that income summary again. Well, hold the show. I thought expenses had debit balances. Why are we crediting them here? Yeah, we have a debit, we need a credit. And if we would debit all of those, it would be doubling them. But by crediting them, we are zeroing them out. Again, if I take a peek here, we've closed revenue by crediting it in here. We've closed our expenses by debiting. I can tell that it's net income because of the whole revenue is greater than expenses. And our net income is staring at us on the worksheet. So we need to take that difference of 2540 and debit. Where's the credit going to go? Who gets the share of net income? Yep, the capital. The owner gets that share. Well, the cool part about that is if I would make a capital one right now, that normal balance is a credit, so a plus. So if this is being our debit, is that a good thing if the credit is in capital? Yeah, that's their share of net income. Our last one, what you wrote in your side margin. What kind of hit is the owner going to take here? Drawing. Okay, we need to close drawing. Drawing has a debit balance, so to close it, we're going to credit it. Because if we debit it, it would double. Where are you going to find the number? Where would we find the number of the balance of drawing? On the balance sheet on the worksheet, yeah? So we'd credit drawing by 1,100 to wipe it out. And you know who's going to take the hit there? The owner. That would be debited. We know that's a bad thing because the owner's capital account's rocking a credit balance. And so if I see a debit, whew, that's a bad thing. Perhaps you like doing this better with my little cheat sheets. Or if you're like, holy moly, that was a lot faster, Mrs. Mars, doing it that way. I will tell you this, on your test, you won't have to pull from a worksheet. They're just going to give you the numbers. Like, here are the final balances for everything. Now close the entries. So you're not like going to have to sit and wade through a worksheet to do it. Okay. The problem wants you to do an income statement and an owner's equity statement first. There is not enough room on the test for those. Not that I want to teach to the test, but those can both go away. So where you see the income statement and the owner's equity statement, for this chapter, we're going to skip them. The chapter itself didn't talk about them, so I don't know why we'd have to try to do them here. And I do not have enough room on the test for these points anyway. What I want to focus on, and we've got a perfect amount of time here, we're going to do another classified balance sheet. I think it's going to feel pretty easy to you because we just did this. So what are you omitting on your homework? Adjusting entries being journalized, income statement, and owner's equity statement. So on the B set, you wouldn't do that. And if you choose to do the C set, you wouldn't do that either. Cool? So find your balance sheet. Are the major headings there? Yes, good. Okay. I think before we tackle this balance sheet, we should go back to our worksheet and decide what we're even dealing with. I know we've been writing all over the worksheet like crazy. This is just my chicken scratch from today, but I think it would be helpful to categorize before we even begin. How do you feel about that? Okay. Let me read in the book quick just to make sure there's nothing that I'm missing. I'm looking on page 200, prepare an income statement, owner's equity statement, we ditched that, and a classified balance sheet. C. Lampert made additional investments in the business of $10,000 in March. We'll see where that plays in. So let's label. What are the 4 classifications of assets? Let's just write them down. There's 4. CA, long-term, PPE, intangible. Okay, those are the 4. Liabilities. What are the 2 classifications that are there? Current and long-term. And owner's equity, the only thing that will ever show up there is capital. And remember, that's forced math based on their share of net income minus the drawing. Okay. So, cash. And I don't know where you want to write these. I'm just going to put them right here. CA. AR. Why? You want to get your money within the next year. Supplies. CA, you think we're going to use those up in a year? Probably. Okay. Equipment, PPE. Accumulated depreciation on the equipment, PPE. Which 2 are we missing? Which 2 are not even in this business? Long-term, and we don't see an intangible. Cool. AP. We're moving to the liability side. AP. Are they current or long-term? Unearned service revenue. It's a liability. I'd put it under current. Are we seeing any long-term? I don't see any. Long-term is usually a notes payable. Okay. Owner's capital, remember that's a forced number, meaning it factors in any additional investments, which apparently the book says we have $10,000 worth, plus net income minus drawings. Are you ready to try this? I got to get my screen on there. Oh, yeah, there was one. I forgot about this one. This is scary because look at down here. I bet our employees want to get paid. It's scary meaning I almost forgot about them. You're not going to have employees very long if you don't pay them. All right, where did you go, balance sheet? Okay. Assets. We've already got it all ready to go. I just made it a lot easier for you. How many columns do you have? Only 2. Why do they do that to us? But current assets, we already know the 3 because we talked about them. So you have a left and a right. I don't even have a left today. How sad. We talked about those 3 already. We labeled them. I think it's pretty obvious because of our labeling. Why are we using the left column? Because there's more than one, so we're going to itemize them. What's going to happen on our next line? Total what? highlighter feature went away, so I have to do that instead. We have 4 categories. We've decided 2 are not being used. What's our next class? I use the word categories too much. What's the next classification? PPE. Am I okay with PPE? Yes, I am. Our PPE, we own equipment. It's rocking a debit balance. Then we have this credit one hanging there. We look at our equipment, less the accumulated depreciation on the equipment. Of course, I'm mad at the answer key. Why wouldn't I be? I don't like that there. I think that we need to have a total PPE line. Hopefully there's room. Is there room? Do you have enough lines? Okay. So I want to see total PPE, and I want that 9,500 on its own line. Just instead of having it on the same line like that, I want you to put the 9,500 on the next line. And then you can say total assets, 17,750. I think 9,500 should be on its own line. Yeah. I mean, it's, well, you remember the one from yesterday? That's when you had the left column. They were having you like itemize in the left, and then they'd bring the like new balance over, and then you'd take your 2 like left columns and bring them way over to the right. That's why they did it that way. What number are we shooting for on the bottom half of this thing? 17,750. If you were pulling just the capital number, it would not work. You have to do the pluses and the minuses. The reason they wanted you to do the other financial statements is because that's how you get the number. But we're just going to dig for the number ourselves. Liabilities. What's our first category? Oh, I said it again. Classification. Current liabilities, and we have 1, 2, 3. We're going to use the left columns to itemize. And if the heading says current liabilities, what's the total going to say? Total current liabilities. And we'll stick that over in the right column. What would come next? That's not even on here. Before we get to owner's equity, what would come next? Yeah, long-term liabilities, but we decided there are none. At the end, we'll get to owner's equity. And what's the only account that's going to show up under there? Owner's capital. You can go ahead and put those in, and let's try to find the number. Can I show you a little hint? If you have no idea how to get the number, you've got 2 pretty powerful numbers sitting there. Okay. What's really great about that, some of you are like, whoa, yeah. It's a really great way to double check your math. Because if you think about it, assets equal liabilities plus owner's equity. You guys, this is simple math. I could take 17,750 equals 3410 plus X. You can figure that out. Okay. I want to show you how to figure it out the long way. Okay. Owner's capital. 12,900, right? Okay. 12,900. Plus, the book says the owner made an additional investment of 10 grand. Plus, what else does the owner get? Net income, 2,540. What does the owner have a hit with? Drawing, 1100. That should be the number. That's why they wanted us to do the owner's equity statement. We don't need that. We can do it just by looking at these numbers. $14,340. Of course, you do need to get to the 17,750. We've made it, you guys. Can you believe it? We did it. I'm so proud of us. This is pretty great. How about a couple key answers for the B problem? Would that be helpful? Okay. Do we have time? Lots of time. Fab. Take a deep breath. This is way harder than the test. You figured that out by now. And we're only into chapter 4 and you figured out that this is harder than the test. The tests will all be individual. It's not like you got to build the worksheet and then if you botch that, the rest of the test is going to be a disaster. They're all exclusive of each other. Is that good to know? Okay, good. So if you can do this, you can do that. Alrighty, problem 4.1b. I can give you a couple key things. I will tell you that you're going to have a net income of $7,480. You're going to have a net income of $7,480. Remember, you are not doing the income statement. You are not doing the owner's equity statement. Your assets equaling liabilities plus owner's equity will be $49,530. So on your classified balance sheet, it will be $49,530. I think it maybe be a little bit helpful to show you that you're going to have 2 of the 4 classifications under assets. And you'll have just the current liability again. Okay. Remember, you are not going to do the adjusting entries. We're skipping those. You did them on the worksheet. I'm not going to make you just regurgitate the numbers. Closing entries. Remember, you'll have the 4. You have a lot longer list of expenses. I want you to just try those. You can get them by just looking back on your stuff. And then, of course, the C-set, they give you some hints. That's what I love about the C-set stuff. You see the stuff in blue? It gives you adjusted trial balance is, net income is, total assets is. And then you, of course, have the answer keys there. They might be helpful when you're doing the B-set. It's net income, which is nice. So Monday then we'll go through this. I'll answer questions. I will have crash courses with anyone who wants them. I'll give you the practice test that you can start writing class on Monday. Okay. That would be a great time though if some of you are like, I don't get the worksheet, Mrs. Mars. I could actually sit at the background table and do like one-on-one work with some of you. Okay. So your options are this in the next 15 minutes. You probably could get the B-set done right now in class. Or if you just want to rest your mind, you can do that too. Thank you guys. 35 minutes we just did.